start in South Africa, where gold mining companies started mediation with unions earlier on Thursday. This development comes after the companies declared a dispute at the end of July, citing the inability of unions and themselves to agree on a specific wage hike level. Now, unions like AMCU and the NUM are demanding double or triple-digit wage hikes, something employers say simply isn't possible. As CCTV's Guy Henderson now reports, one of the country's more aggressive rising unions, AMCU, has now agreed to take part in those talks.
Chamber of Mines has been attempting for quite a few months now to try and get AMCU to the table. So this is being seen to some extent as a bit of a breakthrough. But on the other hand, it is a double-edged sword because AMCU are demanding a 150% pay rise for entry-level underground workers. The NUM itself, the COSATU affiliated union, is demanding a 60% rise for those same workers. That's led the union to lead a dispute declaration against the Chamber, and that mediation process begins on Thursday. The Chamber itself has now taken the unusual step as well at the end of last month of declaring a dispute of its own against AMCU. So talks are at least underway. The two sides are talking, but with mining bosses being increasingly squeezed by the continuing fall of the price of gold, the next few months are likely to be extremely grueling. Guy Henderson, CCTV, Johannesburg.
Elsewhere, though, the world's third largest producer of gold, AngloGold Ashanti, reported a second quarter loss and suspended dividend payouts after the precious metal suffered a record 3-month drop. Now, the adjusted headline loss, excluding some one-time items, was $135 million in the quarter, compared to a profit of $113 million in first quarter of the year. Shares in the firm consequently slid to a 12-year low, dropping by as much as 6.5%. They were changing hands about 5 or so percentage points lower at 115 rands and 89 cents by 2:43 p.m. in Johannesburg. That's the lowest intraday level since April 2001. AngloGold has operations across 10 countries. It has announced a fairly aggressive set of across-the-board spending cuts that will affect jobs, capital expenditure, exploration and production at higher-cost mines as it adjusts to a gold price, which so far this year is 24% lower. The company plans to begin mining gold in 2 low-cost mines in the Democratic Republic of Congo and Australia later this year. Now let's expand this conversation to open perspectives from the UK and South Africa. CCTV's Miriam Bemard is live in London. Angelo Coppola is in Johannesburg as well. Miriam, let's start with you over in London with a fairly broad perspective of where gold prices are headed over the next 12 months. Where do analysts see bullion prices going?
Well, Rama, gold has already seen some of its largest drops. This year alone, it slid 21% to around $1,300 US an ounce and then dropped even further to $1,100 after the US Federal Reserve hinted at tapering its QE. That sends a message, a clear message, that it will be a bumpy ride for bullion. Many experts here are forecasting prices to fall to around $1,050 US dollars an ounce by the end of next year. That's why some believe that central banks will be the major force behind boosting volumes again. Central banks still buying despite the drop in prices as they need the gold to protect their reserves.
Indeed. Angela, South Africa has some of the deepest gold mines in the world. So given that depth and the costs involved in getting that far down, what cost savings really can be realized in AngloGold Ashanti's operations in South Africa? And the CEO says he's got plans to, quote, aggressively advance the underground technology push.
Well, let's just have a look at it slightly differently, because the Council for Scientific and Industrial Research is saying that the South African gold mining sector is at exactly the same place that the Americans were with their copper industry in the 60s and 70s, when technology stepped in and resolved the issues there. While AngloGold Ashanti are talking about this aggressive push into technology, you will recall that probably in about February or March, they came out with some findings of their own. They'd been using non-blast technology in one of the mines in Carltonville, which is just on the outskirts of Johannesburg. And the results of that were that they were probably going to be increasing their gold reserve in South Africa by some 30 million ounces. So they're saying that the technology is available, they've tested it, it's not new technology, it can do the job. The question is, what's going to happen to the laborers that have been doing that work in the meantime, Rahman?
Indeed. Coming back to you, Miriam, in London, the firm, of course, has announced a fairly aggressive set of spending cuts right across the board, hitting everything from capital expenditure, exploration being cut across a dozen or so countries, some 2,000 plus jobs on the corporate side also being cut off. What's the reaction from analysts and investors on your end?
Well, Rama, for the most part, it was somewhat expected. AngloGold posted a $2.2 billion quarterly loss, if you remember, after a $2.4 billion post-tax loss on the value of its assets because of lower gold prices. You know, investors aren't surprised of these drastic measures. That's why investors know for many miners the price drop is close to or even below the miners' all-in cost of producing gold, forcing many to respond by cutting costs and paring back spending on building mines or exploring for new assets. In fact, we're already seeing AngloGold's partner, Randgold Resources, trying to avoid write-downs despite about a 60% drop in its net income for the quarter.
Indeed. Finally, Angelo, according to the firm's CEO, there are no plans for immediate job cuts, at least not on the mining side. But given the overhead situation in South Africa, you've got rising costs, quite a few labour disputes as well. I mean, at some point, really, there have to be job cuts, aren't there?
Well, you know what, if I were a cynic, I would say the mines themselves would probably not be well advised, or would be ill advised, if they started announcing job cuts while they're in wage negotiations with the new union, AMCU, the dispute that's happening between the chamber and themselves. So if they were going to announce cuts, they're probably going to wait until after this current round of wage negotiations are out the way, because if they were to go and announce cuts now, or the intention to cut, you'd probably find that all the unions would go on strike and those mines would come to a standstill, and we would land up with potential risky situation like we had that led to the Marikana deaths last year. So it's unlikely that there'll be any cuts announced in the very foreseeable future, at least until after this current wage negotiation round. Rama?
Indeed. We'll have to leave it there for the time being. Thank you very much for your insights. CCTV's Angelo Coppola in Johannesburg and Miriam Bemard over in London. Now let's move on to Mozambique. If all goes according to plan, construction work on the bridge between Maputo and Katembe in Mozambique should be wrapped up in the next 3 years. Once complete, that 3-kilometre bridge should ease the movement of people and goods in a region which so far has been served by some pretty dilapidated ferries. Here's CCTV's Julie Shire with the details.
Chinese investment in infrastructure is helping Mozambique grow economically at more than 7% a year, making it one of the fastest growing countries in Africa. But there are poor infrastructure limitations that are hampering this country's progress. To change this situation, China is assisting with a major project, the Maputo-Katembe Bridge and Ring Road. The project, costing $725 million, was awarded to Chinese state company China Roads and Bridge Corporation and includes the construction of a 3-kilometre bridge, as well as the roads between Maputo and Ponta do Ouro on the border with South Africa. An ambitious project which will bring a much-needed boost to the economy and generate many jobs.
We will provide in the 3 years, when we're working with the bypass and the bridge, we will provide more than 1,000 posts for the local people. And I think the Chinese technicians will working together with the local people and try to learning and give them the skill of the work in the infrastructure like the road and the bridge.
The two sides of Maputo Bay are currently linked by an aging fleet of ferries, which are mostly overloaded with no safety features such as rafts and life jackets. A trip by ferry can take anything from 30 minutes to an hour, depending on the number of passengers. A harsh reality that is far too familiar with commuters.
It will be very good if we have a concretization of the construction of the bridge. We as a people of Katembe, we are waiting for this a long time. We are waiting.
The wait is expected to last another 3 years, but once the bridge is built, the trip will be uninterrupted, and the population of Katembe is expected to increase from its current 20,000 to over 400,000 people. This ferry service is not sustainable, and its marine infrastructure has not been maintained for many years. making this crossing not only dangerous but extremely time-consuming for everyday commuters. The Maputo-Katembe Bridge, once finished, will be like a dream come true for many Mozambicans. Julie Shire, CCTV News, in Maputo, Mozambique.
We've got about 14 more minutes in the hour. Here's what's coming up next on BizAfrica. The JSE is to license its top 40 index to a Chinese fund manager. We'll have the details when we come back.
BizAsia. Asia means business.
Welcome back. The Johannesburg Stock Exchange does continue to explore business opportunities around the world. Early on Thursday, the exchange hosted their counterparts from the Shanghai Stock Exchange as part of the inaugural South Africa-China Market Forum. At that event, the Chinese fund manager, GF Fund Management, signed a letter of intent with the JSE for an index product license to create exchange-traded funds based on the JSE Top 40 Index. Now, in the wake of that deal, Chinese investors can now trade JSE Top 40 derivatives in Hong Kong dollars on the Hong Kong Futures Exchange. That deal seeks to enhance investment flows between the two countries. The forum saw over 80 leading fund managers from the Shanghai Stock Exchange trade ideas with their South African counterparts.
China is a major investment destination. It is the largest saving nation in the world, and as such the opportunities for growth opportunities will exist there, and we would like our investors to have the opportunity to invest in China through this collaboration.
These exchange traded funds, it opens a door. It's like we provide a efficient channel for Chinese investors. They can seek in the invest opportunities in South Africa, so they can enjoy this economic growth of South Africa.
Now, small and medium-sized enterprises are quite literally the beating heart of any economy around the world. But rather disappointingly, South Africa's SMEs make up just 30% of that country's entire GDP. That's 20% less than its developed world peers. A solution, however, may be at hand, as CCTV's Angelo Coppola now explains.
Unemployment is being tackled in South Africa by the government via the state-owned companies like Transnet and their Enterprise Development Hub. They're going to the root of the problem, small business, where 12 million people rely directly for their livelihood.
It's in line with the call by government itself to promote economic transformation, to ensure an inclusive growth, bring on board new entrants into the economy so that the wealth can be shared. It's to ensure that we create black industrialists, we support the government supplier development program by placing the state-owned companies at the pivot of that effort.
There are government agencies that have been working to provide opportunities for entrepreneurs to develop their businesses. One of their main challenges has been that they aren't linked to a business that can provide business opportunities. This is set to change. But how will the success or otherwise of the hub be judged?
That is very difficult to estimate because the hub is not just for Transnet enterprise development or people that want to do business with Transnet. The hub will be for any entrepreneur that wants to get assistance to pursue their business, to give them assistance to articulate what they would like to require.
Budding entrepreneurs and established business owners are being targeted as potential clients for this hub in the centre of Johannesburg, which is the first of many that will be established around the country in the next 12 months.
How I got to start my own company is that I used to cater with my friend. Then I realized that I think it's always better, let me do it by myself. That's how I got to start my own company.
The hub is being built as a one-stop shop, but it may also serve another, more valuable role.
Because there are so many companies that they come here for launches and meetings and stuff like that. So I think it's good because you meet people, then eventually they'll do business with you.
Transnet has shown their credentials, having created some 28,000 jobs. It's hoping to replicate this success in the enterprise space. The call by government and some business organizations for more black industrialists received good news today with the announcement that Transnet is to launch an enterprise development hub. We'll have to wait and see how this pans out. I'm Angelo Coppola at the top of the Carlton Centre in Johannesburg for CCTV.
Now I have, of course, shown you one side of the Eid celebrations right across Africa. Let's show you another right now. Starting, of course, in Nigeria, the markets were, as you can see right here, closed, primarily because of the celebrations of Eid. However, the rest of the market were open, except for also Egypt. The JSE All Share Index ending the day higher by about 6/10. The 20 share index in the Kenyan capital, however, ending the day in the red, down 0.16. The Egyptian market being closed on the day. That's it for you on Business this Thursday. Back to Penina now for the sport.